Most of the time, Bitcoin does nothing. If you put that on a quarterly basis, how does it move on a quarterly basis? Suddenly you've got a really positive skew to the upside. It does nothing most of the time. And then sometimes it goes up 100% in a quarter. And if you're not there for that quarter, you kind of miss the whole run. So Bitcoin goes on these repricing events, but it doesn't do it often. And, it's one of those things that I think a lot of people fantasize is probably the right word about perfectly selling the top of the cycle and perfectly buying the bottom of the cycle. And they kind of miss that, like, there's about 10 days that you have to be there for and you have to be allocated for, because that's where it happens. And most of the time, people who are trying to bottom ticket, they miss the first 3 of those 10 days because they tend to happen very early in the bull cycle. And then they come towards the back end of the cycle. So a lot of people who are trying to bottom tick this thing, like, and what I've been saying to folks, if you look at mean reversion models, all of them, 200 day, 200 week, realized price, literally every mean power law, choose your weapon, any mean reversion model you look at, we're in the bottom 20% of days at 70K and below. At 60K, we're entering like 10% of days territory. Why did gold do what it's done? Because people took physical delivery. And by people, I mean large-scale entities. We saw there was a period in time when they first launched all the tariffs, and suddenly there's just mountains of gold being shipped across to the US, so much so they had to adjust the GDP numbers because there was so much gold moving. Why did gold go up? Because people took physical delivery. What's Bitcoin really good at? Physical delivery. You know what I mean? Like the more that people just stack the sats, you just put the bottom in. Like that is where this goes. And when you watch something like silver and gold add trillions of dollars in what looks to be like a blow off top, but trillions and trillions of dollars, Bitcoin's going to go on a run.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
We are back. Brian, good to see you. James Check, welcome back to The Last Trade. What's going on, man?
Thanks for having me on. Yeah, no, it's good, mate. It's exciting times to be in Bitcoin.
As always. Yeah, it's exciting, right? Right before we hit record here, we were just talking about on both sides, a lot of panic, right? Not from us, but from people that we work with. There's a lot of uncertainty in the markets right now. Last time we had it on the show was, I think, the week after we hit a new all-time high of 126. Or it may have, I think that sounds right. And then since then, we've just kind of tested new lows. Just for the audience to remember, so this was back in October. I think at that time, James, you were pretty balanced, as you usually are. And I think your take was maybe perceived to be bearish relative to other analysts who were still calling for us to hit new all-time highs again before the end of the year, surpass 126. But you said, let's pay attention to what's happening on chain. Let's take a look at, various metrics that you do and get a sense of like, all right, what are the key thresholds that we need to be paying attention to? And I think you'd referenced some points around 95K. There were some other things to be paying attention to as well. And alas, here we are in the 60s. It's been a wild, and I think for some people unexpected past couple months, but maybe it was exactly what you expected. So I'm curious just what you make of it all in the past few months and where we are today.
Yeah, well, first things first, nothing in markets ever. If anyone says that it was perfectly expected, they're lying to you because that's just not how markets work. There's always surprises in the mix. This is one of those great examples of expectations not being met and that creating a bear market, in my view. Like there was a ton of selling that, and I think we probably would have talked about that back in October because there was just a ton of hodler selling. And that really it's fallen off an absolute cliff. We're back to 2023 levels of profit taking. I did a study yesterday, like the last 30 days, we've gone down from, it was like 95 or 98. So very close to that local high that we hit. We're down like 37% since that local high. That alone, that 37% drawdown in a bull market context, that's like the deepest dip that you get. So we've had, within the context of a bull market, a 37% dip in the last 30 days. Now, on that 37% dip, what would you expect to see in the bear's going to get considerably worse? You would see people taking profit and going, get me out of this thing because I think it's going to 10K, like get me out of my profitable position at 98 or at 60 or at 80 or at 70. What we're actually seeing is people who are from earlier prices, so below 60K, sitting tight. Less than 8% of the coins that moved were coming from below 60K in that last 30-day period. The majority of them are people who bought high going, it was unexpected that we went down at all, and they're in the process of capitulation. So I'll give you a quick summary of my views. You mentioned 95. I said 95K, I called it the bull's last stand. And the reason I called it that, I like to think about, I believe on-chain data is a fantastic measure of human psychology. Where is everyone's cost basis? Where is price relative to their cost basis? How much profit are they in? How much loss are they in? And most importantly, when do those things flip over? When do lots of people who are in profit suddenly go to not in profit? Is profits evaporating? Sucks. Profits going to losses? Sucks more. Selling the bottom and crystallizing those losses is the worst, but that's what most people do. 95K was where I think at the time it would have been 65%. It rose up to about 70% of all the wealth that's been invested in Bitcoin was above 95K. And my general framework as we sold down from the all-time high was I had these key levels and they happened to be nice 5K increments. At 110 was the short-term cost basis. Anytime you go below the short-term cost basis, you just have to be at a minimum cautious. You're no longer in an uptrend, right? On the short-term timeframes. By the time we got to 105K, which is not a long trip from 110, we got past the midpoint of that 70% of the wealth. So suddenly you've got half of all those guys are underwater. At 100K, we hit the long-term average of everyone's portfolio value. Bitcoin's an old beast. The average portfolio value for all coins in the system is plus 80%, right? People are up 80% on their position on average. So that was at 100K. And I'm like, now you're beyond the halfway point of all the recent buyers. You're also you're at the halfway point of everyone all time. And 95K, like, I don't know how you want to, what is the correct number of too much money underwater? 65, 70%. It's big enough that I'm like, I think things change. If you get down to 95 and the trip from 110 to 105 to 100 to 95, it happens quickly, right? It's not a large price gap. And my thesis was if we get down to 95, we're probably going straight to 80 because that is the long-term average for everyone, like the break-even level for investors on chain. So, and it's also where the ETFs have their cost basis based on inflows. So my rationale was between 110, 105, and 100, your exponential risk of going to a bear market just climbs. For folks who really want to stay in the bullish camp, stick around at 110. But once you get to 105, you have to lift your probabilities of bear. Once you get to 100, you got to lift them again. And once you get to 95, if you're not seriously thinking about your bear case, good luck. 80K was then a very important level because most people, I'm of the view of, and just, I base this on Twitter and sentiment and messages I get, that process from 80K until we broke it in February, I would describe that as like the stages of grief. The vast majority of people were still in the early stages of grief about it, like believing it was a bear. Believing it was a bull. They didn't want to accept that we were in a bear market. The break below 80 in February, we reached the acceptance phase. Everyone now believes it's a bear, and all the people who thought it was a bull market dip are now reassigning their bear probabilities down to 30K, 40K, 10K, 1K, right? They're all adjusting their price targets that they never had to lower levels. So I think we've hit the acceptance phase of the bear. I also think we've, like that sell-off, both in November, but then again in February, we had over $2 billion in losses on a single day on both of those days. They are like some of the biggest capitulation events we've ever seen in Bitcoin's history in dollar terms. I'm of the view that I think we've had a meaningful capitulation. That doesn't necessarily mean the bottom is in, but I do think it means we've hit a inflection point in the bear. If you go back and look at all previous bears, there's like the initial shock value. You come into the bear, no one really believes it. A lot of people get chopped up in the bear flags and all that kind of thing. Then people reach acceptance. And then a lot of people are just like, I'll come back. I'll see you in a year. I'll walk away. You get a lot of people who just exit. You get a lot of people who panic out. A lot of people who go and just get bored and leave because of time pain. But generally speaking, a lot of the price damage is done, right? That doesn't mean the bottom is in FTX, but what's the difference between 17.6K and 15K in 2022? Not that much. We hit 17.6 in June. FTX took us down to 15.6. We reigned for a while. Like, as a long-term investor, that's irrelevant in terms of price action. But there's a 6, 7, 8 month period of time that just beats people down. So I'm of the view that we've done most of the price pain damage. What we very likely have ahead of us is the time pain component of this thing, which is often as brutal, if not more brutal, for the investor mindset. So that's my big picture view of where we are at the moment.
All right, it's 2026 and we have a new year ahead of us. It means it's a great time. It is an opportunity to take inventory. Think about your Bitcoin custody, your inheritance plan, your broader ownership structure, and your goals. If you're looking for more peace of mind this year, get in touch with us here at Onramp. We're working with individuals all over the world, people who've been in Bitcoin for a decade, people who got in for the first time last year. We're working with individuals who use self-custody and have done so for a number of years or even over a decade. And likewise, we're working with people who never felt comfortable with self-custody and who have Bitcoin on an exchange. Either way, get in touch with us here at Onramp. We have a private client type approach to our relationships. You have a dedicated account manager, always human support, multi-institution custody with inheritance included, an IRA account included as well at no additional cost, access to Bitcoin-backed loans, insurance is included, trading capabilities as well. And for a limited time, if you use the code TLT, you'll get 50% off your first month with Onramp. Now, I will say, it may be worth having a conversation. So when you speak with me or speak with someone and book that consultation on our homepage, you can just mention you heard of us through the last trade, mention TLT, and we'll still take care of that if you sign up. So hope you enjoy the rest of the episode. Thanks for being here.
Yeah, that's all fantastic, James. Thanks for walking through that. I guess one question that came to mind as you were mentioning some of those numbers and thresholds that we had talked about on the last episode, given the capitulation from what seems to be a lot of people who had a much higher cost basis, how does that then sort of reframe those health gauges or numbers in terms of where we are today? Like, are we in a healthier position basically because a lot of those people are now out and we sort of cleanse the system of people who bought much higher, don't have as much conviction as longer term holders, and does that help sort of set a base, even if 60 wasn't the exact bottom? Maybe it's around here because it's a healthier sort of composition on chain.
Yes. So I'm actually running this study at the moment to just fully quantify this, compare it to the 2018 and 2022 bottoms. So I don't have all the numbers yet, but the answer is yes, in part. We have started to get that capitulation type effect. The general way that I would frame it up, if you compare 2022 and 2018, they're actually very, very similar. So in whatever you want to call the bottom formation range, in 2018, that was like 3K to 5K, that zone where we chopped around for a couple of months. In 2022, it was like 15.6 up to 25. It's kind of a larger price range. At that point in time, we had about 25% of the wealth just in that zone. Now, before we got down here, when we were trading up at 80K earlier in the year, there was only 10%. Less than 10% of the total wealth was in this current zone that we're in between, let's just say 60 and 70. Now we're up to 15.5%. So we've seen it's about $50 billion of coin has been deposited from higher cost basis down into this zone. So, through this kind of boring, choppy, as the dust is settling, in this process, we've seen $50 billion reallocated. It's more than $50 billion reallocated to new investors. And if you think about who is buying right now, the headlines are horrendously bearish. The price is down 50%. People are saying that gold is going to be the future of the internet. Like, get out of here, right? Tokenized gold, what are you talking about? So there's a bunch of these narratives that it's a really, really bearish setup. And for me as an analyst and for me as an investor, that's fantastic, because when everyone feels safe to jump in the bearish pool, and I've been using this concept, like, why don't journalists bring out their bear articles at 120K? Because it doesn't feel safe to do a bear article then. It also doesn't feel safe to take out leverage and do a Bitcoin-backed loan when the price is down 70%. But I'll tell you what, I got a lot of calls to do that at 110K because it feels safe to jump in the pool on the bull side. So we often see this like investor mindset where people want to feel safe to take risk. For a journalist, what's taking risk? Putting out a bold headline that strategy is going to implode and Bitcoin's going to zero. It's a bold headline that you're only willing to put out when the price is down 50, 60%. Right? So the journalists now feel safe to jump in the bearish pool. The people who thought it was a bull market 4 weeks ago now have a price target of 30K. Right? This is, again, the bears feel very safe to jump in the pool. And again, this doesn't mean the bear is over. In fact, I don't believe the bear is over. We've got a long process of painful, grinding, maybe lower prices. There's a journey ahead of us. But the signals that we're seeing, just if you put all this together, do you ever see this at the top? No. So at a minimum, are we at the top anymore? Absolutely not. Like, we are much, much closer to the kind of environment and sentiment that you see near bear market floors, and certainly not at bull market tops.
Yeah, no, that's very well said. I mean, just the note on a very strong signal historically being people boldly proclaiming Bitcoin is dead. We've seen a lot of that over the past couple of weeks. One thing I did want to go back to was, like, you talked a lot about investor psychology and sort of the behavioral elements of holding this asset. And I think it's, part of the reason that this down move has been, maybe more uncomfortable for some is because there isn't a specific thing that people can point to. There's not like an FTX implosion. I would say there's a lot more sort of macro uncertainty in the world, geopolitical uncertainty, which I think are factors, but I think it's a confluence of things. And so I think that is unsettling for folks to not be able to point at something specific, because then you kind of never know if it's over. And so I'm curious from your perspective, like, beyond just the simple sort of maybe the easiest explanation of investor psychology, cycle thinking, what would you pinpoint as like the cause for a lot of this decline?
Yeah. No, this is a really, really good point. And there's a few elements here. So first things first, I actually think the economy side of things is actually really important. I'm not one of these folks who will anchor to one. Everyone's got a story and narrative. And, you always see these metrics. The last couple of weeks has been, oh, look, Bitcoin's perfectly correlated to software. It's like, okay, yeah. For like what? The window of the chart that you didn't trim because the rest of it looks terrible. So it's one of those classic things, but like there is a relationship, a correlation, let's call it, between Bitcoin and your PMIs. And like, if you look at the US PMIs, they've just been grinding along with nothingness. They're just like in this neutral zone of not doing well. So I would just generally say that the real economy hasn't been doing that great. I think that's a component. In fact, I've got this idea I'm still formulating and need to put some numbers around it, but I do think that I'm starting to think about this 23 to 24 period a little bit more like 2019. It's like a echo bubble hangover from the bear that came before it. 2019 and 2020, that was very formative in my Bitcoin years. So I remember the emotional journey I went through quite closely. And it feels like we're in this, we didn't really deserve to go up. Like in 2019, it was because we had the plus token Ponzi that sucked in like 2% of the supply, and then they unloaded it in July onwards. So there was like a big supply demand that created a bull, but it wasn't really a bull. We had the ETFs and treasury companies that kind of created a bull, but it wasn't really a bull. So I think there's this like transitional thing that we're going through. And there's a whole lot of economic relationships between those two periods as well. Like a bit of a, we had the repo rate spikes. Like there was a lot of things where the economy wasn't in. And I think a lot of folks thought the debasement trade. I don't think we've been in the debasement trade. I mean, if you actually look at the way that the system is currently operating, it's kind of like clinging on, not austerity, but it's certainly not throwing money out everywhere. So I don't think we're in this like just raw debasement trade. There's a few elements that I think have probably people don't fully kind of put them all together. But first of all, I know a lot of people are Bitcoin only. I'm certainly Bitcoin only. A lot of people who aren't. And if you aren't Bitcoin only in the crypto space, your portfolio has been a bag of dead weight. It's done terribly. So the crypto world has done horrifically for many very easy to understand reasons. There's no value capture there. So I think that the crypto industry has been a drag on people's portfolio. I've actually had a lot of messages from people who have been like a diversified crypto portfolio who are going, even in this bear market, saying, that's it. I'm done. I'm totally done with altcoins. I am now going Bitcoin only. So I've had a lot of those messages recently. I think treasury companies nuked a lot of people's portfolios. I think a lot of marginal demand went into these inflated stocks, which then proceeded to not inflate. So I think that crushed a lot of marginal demand. And then I also just think like the 100K level was, you can just see it in the data. People like to say, like, why would you sell at 100K when it's going to $1 million? It's like, because they've been holding for such a long time. People made fun of the dude who cashed out $9.6 billion via Galaxy. They made fun of him at the time. It's like, but what's going to go higher? It's like, dude, the guy top ticked it with a $10 billion sell. He's fine. You know what I mean? Like, so there's those components of just like 100K was a very special number because it was the unbelievable, impossible stretch target for all of Bitcoin's life. So the way I've been thinking about it, I kind of liked Jordy Visser's IPO moment. I think it's a nice way to think about it. It's not going to be a perfect analogy, but from a mental framework, I think we're in that transitional period from the Bitcoin world too. So I actually reflect on my own journey. So I'm like 90% Bitcoin, 10% precious metals, and I've been buying a lot more precious metals since 2024, really. And yeah, I can go through the details of why that is, but for me, I'm divesting out of Bitcoin not by selling it, but not as buying as much personally. So I'm actually allocating more of my marginal capital to other assets. Why? Because I'm at a stage in my life where I've got a kid. I need to get a house. Like Bitcoin's down. My net worth got cut in half, 50%. Now I don't need to sell my Bitcoin, but what if I needed to pull the cash? I would hate to have to sell my Bitcoin in a distressed position. And I've had plenty of friends call me recently saying I'm in that position. So I use the precious metals as ballast in my portfolio. I think there's a lot of Bitcoiners who are just like us, and they're at a point in life where they actually realize they've finally clicked that they can't be 100% Bitcoin anymore because life is life and life is complicated. And so is Bitcoin. When you put two complicated things together, you get chaos. So they're looking for, I just need I need some stocks. I need some gold. I need something that isn't Bitcoin. So I'm not like, my mood isn't anchored to this price chart. On the flip side, the institutions that are coming into the market, first of all, they take a lot longer to move. But second of all, they're diversifying from a 100% not Bitcoin position to a small percentage of Bitcoin. And the capital that they bring with that small percentage offsets everything that we're going to divest. So I just think that 100K zone has been almost like a end. If you want like a full stop on the end of Bitcoin's early life, I think 100K is it. And we've watched a very, very big capital rotation. And, I try to help people understand you have a decision tree. Bitcoin is either dead and going to zero. If you choose that, if you fundamentally believe that it is not going to zero, which I certainly do, then eventually it's going to put in a bottom. And when it puts in a new all-time high, which it will do, when it puts in the next all-time high, you can't blame it on the ICOs. You can't blame it on stimulus in 2021. You can't blame it on the ETFs. You can't blame it on the president. It's just demand. So I think that we're in this rotational period where a lot of hodlers, they extrapolate what their wealth could have been and will be eventually, but patience is a part of markets. The institutions are only just starting to onboard, getting all the tooling, the wirehouses, all that kind of stuff. All of those things are in the process. The infrastructure is there. And when we take out that next all-time high, narrative follows price. The amount of, there is nothing that the critics can throw at it. Like that is just, you are now objectively wrong in every possible way. You can't pinpoint it to anything except people just wanted to buy this thing. So I think we're in that process. So for me as a long-term investor and a Bitcoiner, you're going to give me these prices, I'm going to take them the whole time you're going to give them to me, because I've restarted my Bitcoin accumulation quite heavily. I've basically turned off everything else because I'm looking at this and just going, this is the time to be DCAing as hard as I can. And once we get back above 80K, I'm going to do exactly what I did before. I'm going to stop buying as much. I'm going to start reallocating to other things, do my divestment strategy. So that's how I'm currently thinking about it.
That is what the people want to hear, James. We're going long Bitcoin. We're going short traditional finance journalists calling Bitcoin dead.
We're just waiting for the IMF to bottom ticket with a 250-page report on why it's going to zero.
Yeah, I mean, the ECB did it last time in 2022.
Yeah, ECB, yeah.
Bitcoin's last stand at like 16K.
It's in like a final death spiral. Oh,
yeah,
what a shame.
That's a great one. I mean, look, there's a lot of different themes we can get into. I think we'll try to cover them all. One point you did make that I think is often overlooked is there is this, forget about the uncertainty around the price. I think you did a great job explaining what's actually going on there. There's just uncertainty as it relates to what is Bitcoin right now. It, as weird as it sounds, you have the treasury debacle that we saw in 2025, and there's obviously a lot of people in this space who've been in Bitcoin 5, 10, 15 years who didn't necessarily appreciate what was happening there. And it was certainly at odds with their vision of what Bitcoin was in terms of decentralized peer-to-peer money. And for it to be co-opted by just Wall Street, traditional finance, the suit coiners, I think there was that battle in the culture between treasury companies and just say, at least when I got in, the culture was very heavily toward self-custody, very ideological driven, nothing wrong with that. And so there's these kind of two opposing viewpoints. And then you have the true suit coiners coming in, or the traditional finance pools of capital that are really only starting to creep in. So then you have them coming into the picture. And then you have all these competing narratives of like, what is Bitcoin? Why should you own it? How do you own it? All these different things. And then to add another layer of complexity to it, it's exactly your point, right? People who are Bitcoiners, a lot of them look like you and I. And they are a lot more mature than when they first got into Bitcoin. Their situation is different. They probably have families. They may be looking to own a home, and there's just a lot more complexity at least there's more complexity for me than there was 5 or 6 years ago, when it was just like, I have nothing else to think about besides myself, and I'm just going to smash buy Bitcoin, and I don't really need to keep any capital on the sidelines because I have no responsibilities.
I can literally empty my bank account. Yeah, I can't do that anymore.
Yeah, I don't have to be responsible. I have no one, counting on me. And so things are definitely changing. And so I think there's that aspect to it as well, where it's always hard to quantify just the culture around it and how that's developed. And I think ultimately as well, what happened last year with the treasury companies, I mean, we talked about it on the last show that you were on, and Michael's not here today, but Michael in particular on our side has been very vocal against them since really the inception of it all. And I think we're kind of in a process now of having to flush through all of the excess that happened there. And maybe some people will atone for their sins and we can move on. But I think there's just, I'm rambling at this point, but I think the broader point is, look, we don't have certainty on the direction that Bitcoin's headed. And that's part of that. That's okay. Like, Bitcoin is for anyone to interact and own in whatever way they'd like. And so we don't need to have one cohesive Bitcoiner to own the asset, but I think there's still this aspect of like, what do the next couple of years look like from that perspective?
Yeah, no, and I actually think there's a component here which I won't stick on too much because I've spoken about this a lot, but I think that the gold rally, the parabola envy, cooked a lot of people as well. Mm-hmm. Yeah. Again, if I come back to my original point of like the debasement trade, I don't think gold went up for the debasement trade either. I think gold went up because the world at a sovereign level goes, hey, we can't trust treasuries anymore, which is, by the way, the same thing they've been doing since 2008. It's just hitting that wall of, hey, they're taking physical delivery. And this is where I think it gets really interesting. Why did gold do what it's done? Because people took physical delivery. And by people, I mean large-scale entities. We saw there was a period in time, I still have no idea what was going on, but there was that period of time when they first launched all the tariffs, and suddenly there's just mountains of gold being shipped across to the US, so much so they had to adjust the GDP numbers because there was so much gold moving. Why did gold go up? Because people took physical delivery. What's Bitcoin really good at? Physical delivery. You know what I mean? Like the more that people just stack the sats, you just put the bottom in. Like that is where this goes. And when you watch something like silver and gold add trillions of dollars in what looks to be like a blow off top, but trillions and trillions of dollars, Bitcoin's going to go on a run. And, it just makes all these things, once these things get moving. Now, on those rallies, it's a bit of a repricing event. We see Bitcoin do this through its history. And I actually think another thing people should always remember, Bitcoin, if you look at it on a daily price performance basis, it's like 40% of the time it goes less than 1% in either direction. 40% of the time, Bitcoin does actually nothing. There's about a 30% tail where it goes up more than 1%, down more than 1%. Most of the time, Bitcoin does nothing. If you put that on a quarterly basis, how does it move on a quarterly basis? Suddenly, you've got a really positive skew to the upside. It does nothing most of the time, and then sometimes it goes up 100% in a quarter, and if you're not there for that quarter, you kind of miss the whole run. So Bitcoin goes on these repricing events, but it doesn't do it often. And, it's one of those things that I think a lot of people fantasize is probably the right word about perfectly selling the top of the cycle and perfectly buying the bottom of the cycle. And they kind of miss that, like, there's about 10 days that you have to be there for and you have to be allocated for because that's where it happens. And most of the time, people who are trying to bottom ticket, they miss the first 3 of those 10 days because they tend to happen very early in the bull cycle and then they come towards the back end of the cycle. So a lot of people who are trying to bottom tick this thing, and what I've been saying to folks, if you look at mean reversion models, all of them, 200 day, 200 week, realized price. Yeah, literally every mean power law. Choose your weapon. Any mean reversion model you look at, we're in the bottom 20% of days at 70K and below. At 60K, we're entering like 10% of days territory. So unless Bitcoin is really just a completely and utterly broken market, which it just isn't, then if mean reversion is a thing, then we're in that zone, that what I call the deep value zone, right below 20% of all days. Those 20% of days occur in the bottom end of bear markets. Price can go lower, yeah, but I just want to buy the whole thing, because if I buy the whole bottom, then I'm going to get all those 10 days, right? I'm just going to get the whole 10 days, because that's sometimes in the whole 4-year cycle. It's literally what makes the whole cycle. If you remove the 10 best days, I need to actually run it for the cycle we've just had. You're actually flat or down, right? 21, if you miss those 10 days, you lost money. In 2018, I'm pretty sure you're flat. And that's just how markets tend to work. They reprice rarely, and it catches people off guard. But that is why it's a time in the market type thing. It's just how Bitcoin works and how all markets work.
Yeah, that's very well said. I think also just on the debasement trade thing, I think it's a very salient point, because last year, this notion of the debasement trade sort of entered the zeitgeist, went very mainstream. But I think that in hindsight, that's kind of a classic case of just ascribing the rationale for price movement, particularly as it relates to precious metals. And I think you're totally right about the spot delivery aspect, and central banks buying, larger entities buying, and demanding physical delivery. I guess I'm curious, like on a go forward basis, like I do still think the sort of like fundamental tenets of what the debasement trade represents are in place to happen at some point. And I guess the question is like, well, when does that happen? What needs to happen for, either the Federal Reserve or other central banks to take serious action and turn on the money bazookas per se? I would say right now, people are kind of looking at AI disruption as like a natural thing to point to in terms of, massive displacement of white collar jobs that's being forecasted. Curious what you make of that. Like, is that a reasonable go forward sort of projection that there's going to be so much disruption, so much job loss, so much credit losses as a result of that they're going to have to turn on the money printer, whether it's like, probably won't sound like something like UBI, but like they're going to have to print money to basically repair the economy when that does happen. Is that sort of going forward what you think might happen, or are there other reasons that the real debasement trade might play out?
Yeah, so I agree with all of that, and I think that the debasement trade it's a thing, but it's like all things in macro, it moves at glacial pace and then it cracks, and it all happens at once. So I very much view, and again, we can borrow a lot of rationale from the gold bugs because they're right on this kind of stuff. Gold and Bitcoin, in my view, are insurance against something that is mathematically programmed to happen, right? Bitcoin is mathematically programmed to have just less than 21 million coins. Gold is programmed to have, 2% inflation, because as technology gets better, we mine more of it, but it's still hard to get. There's a whole lot of gold seams that are now accessible that weren't previously because the price has gone up, and eventually technology will get better, right? Now it is hard manual things like digging holes in the ground. Yeah, we get some technological developments, but dynamite's still dynamite. It's kind of hard to have bigger dynamite. So generally speaking, physical deflation occurs at a slower rate than digital deflation. Now, on the AI thing, I've got a few different views on AI. I've been using it in two different ways. Up until very recently, the primary way was just helping me fix up some of my chart code and stuff like that, right? More in the programming side of things. I don't use it for any of my writing or my thinking because, first of all, thinking is like my favorite thing to do. So I'm just not going to outsource my favorite thing to do. And I also think that the human element of having lived through Bitcoin cycle helps me contextualize the data that I look at. So in many ways, I try to take all the complexity of the data and just explain the narrative of what it's saying. And a lot of it is drawing on my own lived experience of going through those market cycles in the past and then how it displays in the data. So that's a big part of my writing style and my thinking style. But I do it like, I don't want to copy paste a bunch of chart code. Like I'm using templates, go and fill this stuff in. It makes a ton of mistakes. It still makes tons of mistakes. And I do find that sometimes I literally just sit down and just do it myself because I just couldn't be bothered checking its work. Now, the other thing I've done more recently is I've been playing around with these open claw things where it kind of takes over your whole machine, right? And just trying to get it to run my code because I have a system that runs it. see if I can get the AI as like a system administrator to sit there and run it for me, which is going to be really useful when I'm traveling or whatever else, if something goes wrong, in theory. Again, something I took away from it, first of all, it's incredible. And I have no doubt that the path it's going to go down, in 2 years' time, in 1 year time, it's going to be a fully fledged system administrator. I'm not a developer, I'm not a system administrator, but I understand technical stuff. Like I use Linux as my main operating system. I find that it's still just like, you've got to ask it 3 times. It makes mistakes regularly. Now, my general framework is that I didn't hire a developer, by the way. The whole thing, I was watching how much it cost me in terms of tokens to spin this whole thing up. It cost me about $70 Aussie, like $50 US. Cost me about $50 to set the whole thing up, get my system running. It would have cost me $2,000 to pay a human to do that. So I chose not to hire a developer, and this piece of what is fairly early software did it for me. Yes, it took a little bit of hand holding from my side, but I didn't have to hire a developer. And at the end of the day, I could have learned to do all the things that it was doing, but I just don't have the time and the bandwidth to do that. So what it really replaced is me hiring a junior. And I think this is where it gets really hairy, because I don't need to learn how to use GitHub and all the ins and outs and the detailed stuff of it. The AI can do that. So I don't need to hire a junior developer. And I think about what that means for bigger firms. A lot of I call it the generational divide. You often hear this kind of thing. There's like a ladder pulling, house prices go up, people pull the ladder up behind them. So then there's all these young folks who are coming out of university and can't get jobs because it's replacing exactly that part. Now, I try to balance these two views and go, well, for me, I used to be a civil engineer. The amount of value I got from being in the office and just hearing, conversing, talking with all the gray hairs and learning the human side of engineering, I can't imagine juniors not going into the office and not getting that experience, because what happens is you end up with no gray hairs. And that, I think, is a very, very scary proposition. Now, this is the generational thing. It's going to take decades to get here, but we're at the phase now where the initial ladder of being an intern has been pulled up. But then I also look at how much value I can create with my human thought and how much value, the graduates that worked under me, they were so much smarter at me at new stuff. They could use new tooling, whatever. And, we're only talking about, 5, 6, 7 years difference in terms of age. But they were able to do what I was doing to my boss, which is bringing in new ideas, fresh ideas, new technology. And I actually really worry about what the world looks like, because in engineering, there was a lot of folks who were quite concerned that there's a huge pool of experience, the baby boomer generation, the Gen Xers. When they retire, we kind of lose a lot of human knowledge. And we actually saw a lot of this after COVID, because the stock market went up so much. There was a lot of retirees who were like 5, 6 years away from retirement. Bang, COVID retired them straight away because their portfolio just took them out of the market. You lost a lot of that human experience. And then I do worry about the world where people are overly reliant on AI. So I find myself, I'm a bit resistant to it because I literally like to think, but I can also see how a lot of people will become addicted to using it to think, and they won't actually learn how to think. I worry about that component a lot, because I think the problem isn't that AI is smarter than humans. The problem is that the bottom end of the bell curve of what people do, a lot of it, like a lot of jobs, are kind of replaceable. They are replaceable. They're, administrative type roles. The challenge is that there's a very large pool of the economy that is disruptable. The top end, harder to disrupt, but the bottom end is easy to disrupt in the knowledge worker base, for sure. Robots is a whole nother thing. So look, all this is a long-winded answer of saying, it's not there yet. I don't believe this stuff where we're going to lose all the jobs tomorrow. But 5 years' time, where the technology is better and we're further down this ladder pulling process, now it starts to get really hairy.
Yeah, it's definitely a hairy topic. I would say my thoughts on it all would be, I agree with a lot of what you said, James, but I also wouldn't necessarily, I don't think you were negative, but I personally am not negative about it, especially for younger generations, because I still think that while someone like yourself or me, or Brian, someone who's actually using these tools every day, or if you're setting up OpenClaw, you're you are just so far out there compared to where most people are. And so I still think that there's a huge opportunity for particularly younger generations, recent graduates, entry-level roles, because while a lot of those roles are going to be obsoleted, the fact of the matter is that about 10% or so of people actually report using any of this stuff on a daily basis. And you'd have to imagine that out of that 10%, it's a very small percentage of people that actually use it for any sort of strategic work. Like, I'd imagine most of that 10% is prompting ChatGPT to like give them a recipe idea for what to make for dinner. And so there's still a lot of opportunity to the extent of people who are willing to lean in and learn the skills. Like, it's there for the taking, but I just don't know how long that window of opportunity lasts because everything is moving incredibly quickly. I think where maybe the most pain happens is middle management. I would imagine like, they're typically getting a nice salary. They have benefits. B, the large companies and the multinational corporations are extremely bloated. You always read about people who work remotely and they don't actually do any work, or they do work like 15, 20 hours a week, not even close to 40, let alone more. And so I think there's a lot of bloat there. And they're also in a tough position. Like, I think that someone who's more internet native, digitally native, 20 years old, 30 years old, is more likely to actually become proficient at this new technology than someone who's like 45, 50, kind of at the tail end of their career. And so that's probably where, and that's an unfortunate thing. I mean, those people are typically in a position of providing for a family. They probably have pretty significant obligations. And that's probably where I'd be worried if, in terms of the workforce. So yeah, I mean, it's a challenging thing to think through. And then to tie it back to Bitcoin, I mean, there's so much uncertainty. And I think, Brian, kind of where your head was at with it all was we are going to see some deflation. And James, you started talking about the deflation of gold, of Bitcoin, right? It's going to be incredibly interesting to watch this play out. I mean, Jeff Booth, I think, has the best thesis. I remember reading that book for the first time, The Price of Tomorrow, and it was like blowing my mind whenever it was in 2020 or 21, because I had never really thought too much about just how at odds these forces were and the degree at which the pressures would grow both ways, right? Deflation from technology, inflation from the monetary system. And so it kind of gives me a little bit sense of relief and peace, knowing that Bitcoin is just programmed to do what it will do, and knowing that there's going to be an insane amount of intervention in the economy and in the fiat financial system to try to patch over as much of these losses and pain that will be presented from artificial intelligence.
Yeah, and I think there's a few elements here. One is we're going to get a move back towards, and we're in the move back towards real things. So, for example, engineering. I know that if I go back and put myself in my old shoes, I'd be able to use AI for stuff, but there's no way it can replace what I was doing at the time. Why? Because a lot of it is dealing with contractors who are digging physical holes, who are dealing like mechanical machines and like steel and concrete. It's not something that AI understands enough to be able to automate those roles. You can't really automate a plumber. Your toilet's stuffed.
Until the humanoids, which may not be that far away.
Look, the last humanoid robots that I've seen was a dude dressed up in a suit, right? So I think it's going to take time for that to become like, where's the full self-driving cars?
Yeah,
they're just not a thing at this point. So there's a bunch of these things where like it'll get there, but we're a long way away from that. So I think physical trades, literal physical trades, physical jobs, physical things are required. We're also seeing this from like the US's industrial policy. They need to reshore manufacturing as a national security interest. It doesn't really even matter if it's that profitable. They need to do it for a national security interest. They're going to subsidize it. They're going to support it. And that's physical stuff. So I think in that sense, there is going to be that move back towards the physical world. And there's a lot of physical jobs out there. I agree with that kind of middle management side of the equation. That's where a lot of this stuff really hits home, the bloat, right? The bloat starts to kick in. But also there's a reliance factor to these things. So I think that's definitely a key component. And really, at the end of the day, the way I view Bitcoin as a gold holder and as a Bitcoin holder, I know that Bitcoin is just a whole lot easier to use. And I think about my young son. Is he going to be using gold coins? Like, guys, we're not Romans anymore. We're in a internet native age. It's a real pain in the ass. In fact, I can't remember who exactly said it, but when we're talking about when France tried to get their gold back, it was like hundreds of ships to take their gold. Like taking custody of gold is a job. It's a physical job, or it's a 10-minute Bitcoin transaction. So I think the world is, over time, it's just a game of trust. And the way I view Bitcoin and gold, they have one very, very important role: not to die. That's it. As long as those two assets don't die, gold's got the atomic side of the equation, Bitcoin's got the human incentive, the greed side of the equation. Why does it operate? Because people want it to operate, right? I am not going to change the supply cap because I'm self-serving. It's in my own interest not to change it. The miners are going to do it because it's profitable to mine. When it's not profitable to mine, they'll sell their rigs to someone who is profitable to mine. Bitcoin is based on a very, very simple assumption that humans will be greedy. And it's just a very reliable assumption. So I think both of the assets, their job is to not die. I very much view them as insurance to get to the other side. And that line there is really what I think is the most interesting and challenging part. Get to the other side of what? That's the debasement side of the equation. That's the mathematical challenge of an inflationary system. Why does the ECB bottom tick a Bitcoin bear market with a price about a paper about why it's dying? Because their system is dying. It's a defense mechanism. They do not want people to buy Bitcoin. They do not want people to buy gold. The IMF will buy gold, but they'll disparage it publicly whenever they can. And I've recently been doing a very deep dive on just history, civilizations, and the like. There's a podcast called Fall of Civilizations, how the Byzantines fell, how the Aztecs fell. I've also been listening to the audiobook of the Bible, not because I'm a religious person. I'm just curious from a historical standpoint. Gold, silver, gold, silver, gold, silver. The amount of times that things happen because of gold and silver. When you study how the monetary system came to be, the amount of mechanisms that were designed to say, give us all your gold, we'll give you a token. There you go, there's your token. Go and spend it, pleb, out in the economy. But we're going to hang on to the actual thing, right? The custody of the asset was the thing they wanted. This is the story of human civilization. And honestly, it amazes me how many thousands of years ago we'd already converged on gold, right? And if you just think about why did we converge on gold? Because of its properties. Bitcoin is, 16, 17 years old? It is so young in its process of becoming understood. There's no chance that the first time they saw gold, like, oh, that's money right there. Has to be. No, they had to, the gold had to compete amongst the copper and the rocks and the shells and all that stuff. And eventually we all go, oh yeah, you know what? That's actually kind of the one. Bitcoin's going to go through that process, and it's going to do it at a much faster rate because of the internet, because of AI, because of just the transfer of information. So it is a sound money for the modern age. So yeah, I think it's just a game of patience, time, and process.
In case you missed it earlier, we are offering a limited time opportunity to sign up. Use code TLT for 50% off your first month of Onramp. I just want to reiterate, stakes are high, and this is an important decision to think through. So I would fully expect that you'd want to have a conversation with someone on our team. You could speak with Cam, myself, Michael. Go to our homepage, book a consultation. You can speak with us for 15 minutes, 30 minutes. No obligation beyond that. You can just ask us questions, learn about the solution. And I just want to make sure that as you as a listener, whether it's for you, your friends, or family, I just want to make sure you have peace of mind and you feel good about this year ahead of us as it relates to Bitcoin ownership, custody, and inheritance. So again, limited time offer, 50% off your first month. Use code TLT. You can just mention that during the consultation, or if you do end up just going direct to sign up, mention that code on the website and you'll be all set. So thanks for being here and hope you enjoy the rest of the episode. What do you think about the droids being the ones that usher in hyper-Bitcoinization? It's at some point we will be incredibly reliant on these models. I don't know when that happens, but I already feel it in my own work. Like, I'm in Claude all day, every day. If someone took that away from me, it'd be like taking a pacifier away from a baby, right? It's a problem. And so at some point we're going to become so reliant on it as, just as companies or individuals. And I would imagine it makes more sense than taking dollars. You're not going to take gold. and you're not going to want to take an inferior fiat currency. And it works from instant settlement. It works from microtransactions. It works very quickly. And you can spin up wallets very easily, right? And so and then obviously the scarcity, but all that is well understood. So like, I'm curious if you think that, because you said this will happen faster than we think, but I think people were also saying that 5 or 10 years ago. Like, they're not saying you were. I'm just saying people, when I first got into Bitcoin in like 2020, like more seriously, 2020, 2021, I think people thought that was imminent. People, most people were saying, oh, dollar collapse is imminent. Hyperbitcoinization happens. Bitcoin standard a couple of years from now. And there probably are still some people who say that, but I would say like most people still don't know anything about Bitcoin and they don't give a shit about it. And they probably aren't going to give a shit about it until they're forced to. And maybe it's the fact that we have to rely on certain technologies that require to be paid in Bitcoin in the future.
Most people don't own like stocks outside like a forced retirement vehicle either. Most people weren't lining up outside gold shops when the price was low. Most people don't think about any of this stuff because life is already complicated enough. Like, I talked to my old man quite a bit. He went on a fishing trip with a couple of his mates, 10 blokes, all retired. And, he and I talk a lot about his finances, trying to help him put in the right things. And, he was saying, I asked them, how many of you guys know what's in your superannuation fund, which is our Australian equivalent of a 401k? How many of you guys know what your super is invested in? No answer. No one knew a thing about what was it. They're all retired, and this is literally the money they have left for the rest of their life. They only know the number that was on the screen when they last checked it. They have no idea what it's invested in. And I can tell you right now, it's almost certainly invested in bonds, and there's no doubt they would have took a big haircut in 2022 because they had no idea. So that's where most people are. They just won't do this ever because it's just human condition. So I think Bitcoin is one of those things. This is where it's actually very favorable that we move to a world where Bitcoin becomes like a 0.5%, 1%, 2% part of just a typical normal portfolio, which means the investment advisors have to become comfortable, which means the firms that run those investment advisors have to become comfortable. And this whole thing just takes time. There's always going to be early adopters to this stuff. We now have the fastest growing ETFs ever. I can't imagine what's going to come out that's going to beat the Bitcoin ETFs in terms of their launch. I think they will hold that record for a very, very long time. These things have been tremendously successful. When you look at the outflow profile from those ETFs, by the way, we're down, 50% from the highs. The AUM is down like 4% in Bitcoin terms. The total flows are at like 12%. So we've just seen, and most of those flows, in my opinion, you can link them to the CME open interest. They all happened before December. It's a bunch of hedge funds doing window dressing to close the end of the year, closing out a basis trade. It's not like sell this thing because it sucks. It's a structural, it was a trade. So I think that it just takes a long time for this stuff to happen. And the vast, vast, vast majority of people have no idea what they're invested in, and they don't do any investing. Even a lot of people that I know, investing is just not a thing that they do. Like, they haven't really gone through the motions. Eventually it hits them in the face where they go, oh, wow, things are getting really expensive and I've got to retire, and I've got to actually save some capital. A lot of people save in cash because they think that it's like, oh, I need some cash on the side. It's like, yeah, but it's inflating away. And like, I've heard stories of some people who've got hundreds of thousands of their life savings in dollars, earning 0.1% in a bank account somewhere. And you're just like, even at 3%, 4%, great. You get $5,000 on $100,000. Well done. Like, that's, what are you going to do with that? So in many fronts, I just think people don't think about it, which means that the system has to evolve. And that's a slower beast, right? You're always going to get the early adopters. And you also, this is the other thing, when you think about the size of the capital, right? If you look at, I need to do this study again, but you can look at all the 13F filings, who owns the Bitcoin ETFs. Last I did it, very outdated study, mind you, it was like somewhere in 24. When I looked at that, then it was like 25% was institutions, 13F filing institutions. Of those, there was a very clear pattern. The smaller the firm, the more likely they were going to have like a 1 or a 2 or a 5% allocation. The bigger the firm, the more likely it was a 0.001%, like peanuts. But that 0.001 was all, if you put those big firms together, like all 10 of them, it amounted to like 90% of the capital of the 13F filing companies. So what happens when they go to 0.002? That's all you need. but I think I've seen a lot of narratives of folks being like, we need the sovereigns to come in, right? The individuals bought Bitcoin, then the companies. Now we need a sovereign to buy it, otherwise it won't go up. No, you just need those firms to go up a fraction of a percentage point. And it just absorbs all the sell side because the numbers are just tremendously big. So that's where I think Bitcoin's in its just overall life cycle journey. And it's just a game of patience, as all things are.
Yeah, it's really good points there on just the one sort of the slow moving nature of institutional allocators. But I would say, like, zooming out a bit, like if we rewind, pre ETFs 2-3 years ago, like there was no sort of acceptance of this thing, of people actually thinking of it in a way that you described earlier around like, this thing just needs to not die. It's a hedge against this mathematical certainty. People were not thinking about it in the institutional world like that. They were thinking of it as a speculative Ponzi. And we are still in the very early stages of that shifting and those allocations changing. And it feels like, and maybe it's just because I'm like tuned into this stuff. And so maybe it's not more broadly known, but like every day, every week, there are announcements from the incumbent TradFi firms that are hiring for dozens of roles for digital assets, Bitcoin, new products, Morgan Stanley filing for an ETF. And then you have like the Abu Dhabi Sovereign Wealth Fund continuing to build a position. And, we got excited about Harvard buying last year. It sounds like they trimmed their position a little bit and bought Ethereum, which is unfortunate. But the reality is they're going to have their learning curve as well around crypto and Bitcoin. And but I think the broader trajectory is like extremely constructive and like couldn't even be imagined 3 years ago that this would be the case where you had all these firms hiring for these roles, now actually like beginning to solicit their underlying clients, because even for the first year of the ETFs, it was like the end client had to like demand to get into it, even if it was on the platform. And we're just now seeing like the early stages of like people actually selling these products to people. And so like, to your point, like you don't need a huge turn in like what those percentage allocations are to get to a place where, like, going back to what sort of Jackson's question was around, is like people don't even need to know that they own Bitcoin. Like it's just going to be in their portfolio at 1, 2, 5%, maybe 10% if they're younger in age. And that's going to be all we need.
Totally. Yeah. And, I think something I often reflect on is you get, something happens on a Sunday night, Bitcoin price goes down 10%. Every macro analyst and commentator in the world posts a Bitcoin chart. Why? Because it was not because Bitcoin's irrelevant, but because it was so relevant, it was on their Bloomberg terminal. It is now so relevant that every macro analyst has Bitcoin on it because they know it's information. They may hate that it's information, but they know it's information. When we break the next all-time high, it is going to be a moment that I don't think folks have properly comprehended how many critics are going to have to realize that they can't keep doing this jump in the pool at the bottom thing. They're going to realize maybe there's something here. And that's why whenever you see a critic, this is one of my favorite things to ask them. They post some nonsense headline or reason like why Bitcoin's going to die. And my favorite question, and it never gets answered ever, is, what is your threshold? Give me any metric. What is your threshold at which you will reconsider your bias that you might be wrong? And they never answer the question. Is it a market cap? If it gets to 10 trillion, if it flips gold, if it flips, what does it have to do? What is your success metric? And the only time I ever see a reply, it's something totally ridiculous where like it has to consume the US dollar. I'm like, okay, then that's really bearish for Nvidia, isn't it? That's really, really bearish for gold. It's really like, set your benchmark up here. Okay, by the way, when that happens, and by the way, I don't think Bitcoin's going to replace the dollar, but, Bitcoin gets as big as the dollar, great. You can buy it up there when it's, Lord knows what the price is when that happens, but I'll happily sell you some.
Yeah. I mean, it's a great point. Like, to be honest though, like I thought that level, that dynamic that you described would be the 100K, and it clearly wasn't, because people are dancing on graves after a 50% decline from 126 or whatever. But I think you're right. Like it can only happen so many more times. Like there has to be a finite number of times where the psychology can or not break effectively to where these people have these inherent biases.
2017, it was too small for them to take it seriously. 2021, stimulus.
Maybe this time it's just like, oh, this is Trump. This is a Trump thing. Like,
just ETFs and the president.
Yeah.
And then you're like, the same way there's no clear narrative on the way down, when there's no clear narrative on the way back up, aside from just kind of ran out of sellers, hey? Right? Too many buyers. When that happens, you just, what do you argue? What do you debate? Now, maybe there'll be something that happens and they'll be like, oh, look, I could point to that too. Keep going. Give me your threshold. What's your threshold where you accept that maybe you got it wrong? Now, if Bitcoin goes to zero, then everything about this is irrelevant. But unless you can formulate a fundamental case for that, right, that's a whole different discussion.
Yeah, I love it. Yeah, just wake me up once we get to that point, James. Like wake up one day, price is pumping every day. There's no narrative. Everyone just wants the coin.
Bitcoin is alive forever headlines.
Yeah,
exactly. Yeah. But I mean, look, in my view, and this is why I love the data that I study, is it helps me understand why things happen, just like the fundamental why. And when you understand the why, the journey becomes fun, because it's about trying to understand, like, okay, so we've got a bunch of top buyers. We're in a bear market. Once you accept those things, we're waiting for the price and the time to be painful enough that those people capitulate out. And unless you start with a base case that Bitcoin is dead, what's your threshold? If it's not dead, then we're going to form a low. We're going to get all these people to capitulate out. There'll be a bunch of people like myself who bought coins at higher price and just sit tight and do absolutely nothing with them. There's going to be a ton of that goes on. Price bottoms out. Narrative follows price. And Bitcoin has this beautiful property where it just reinvents itself every single time. It comes back with a new reason why it's awesome. And it just takes time. Like, we know it's awesome. It just takes time for people to remember and finally work out that it's awesome. And once you realize, like, there are very few people who become a Bitcoiner and then go like, yeah, actually, you know what? It really sucks. Like, very few people drop off the other side of the map. They tend to come in and go, yeah, okay, I get it.
Yeah. If you liked Bitcoin at 126, you're going to love it at 66, right? I mean, like, that's the crazy thing about this asset. It just, the volatility, I forget, I think I said it on a recent podcast, just like the monkey brain, it doesn't compute well with Bitcoin's volatility. And so for a lot of people, they feel like they have all the conviction in the world. To your point, they're jumping in the pool at 110, 120. And then a couple months later, we're in the 60s. Nothing's changed about Bitcoin, but it's like, well, shit. Is it going to 4? Is it going to 0? Right? Like, people get really scared very quickly because it happened so quickly. I remember at the start of the year, we were getting close to being back above 100K. We had Marty Bent on the podcast, and we were like, we were joking, but we were talking about, all right, like, we're going to be ripping higher, super cycle, all that kind of nonsense, right? And then funny enough, we're in the 60s, just like it happened in 2 or 3 weeks. So, it's
the funny thing about sentiment, so I did a pod, similar time I would have been on with you guys in and around October. Marty and I spent like 80% of the podcast describing that 110, 105. We're probably only going, if we take out these levels, like the bear case, we're probably going to 80. We spent 80% of the podcast talking about that. And then right at the end, he's like, come on, give us a bullish throwaway target. I look, probably go to 150. That's like where a throwaway comment. And then I did my most recent quarterly with him. And in the comments, everyone's like, this guy called for 150. What an idiot. I'm like, did you miss the 80% of the pod that we were talking about? Like, not that, like being able to distinguish between, by the way, first things first, price predictions. If I can just give the audience something that's like really valuable, stop looking for them. No one knows. No one knows. Not even myself that spends all day in data trying to work out where we might go. Everything is a probability distribution. Everything is a random walk, in the short term, even more so. What you're just looking for, like, and this is where I come back to like the probabilities of things. Just give me an environment for Bitcoin where the odds are much more in my favor, right? I want to go into, markets are a casino. I want to go into the casino with the best edge I can possibly get. The best edge I can possibly get, you can look at mean reversion, you can look at investor behavior, look at capitulation levels, you can look at the volume, who's transacting, who's not. Right now, in this current market environment, every mean reversion model is in the bottom 20%, and that bottom 20% corresponds with bear market bottoms. Can it go lower? Yes, but it's all part of the bear market bottom. I don't care that I bought at 8K, 6K, 4K, 5K back in 2018, nor 15, 16, 18, 20, 22. All of those are great prices. I'd buy all of them again right now. Buying the bottom as like a thing rather than an event. Stop thinking about the bottom as like a day. Right now, we're in the bottom 20% on every mean reversion model. deep value zone, in my opinion, and that's below 70K. We've got capitulation where people who bought the top are now the primary sellers in the market, so people crystallizing losses. We've seen the number one headwind from 2025, which was long-term holders taking profit, has collapsed back to 2023 levels. So that is not picking up on any rally. So we've seen profit taking go away. Losses now dominate the market. Prices massively stretch below in the bottom fifth of all mean reversion models. What are you doing? The headlines are bearish. Like, this is the time where the pool, the bull market pool, is the coldest, and it sucks jumping into it. But I don't regret any time I've jumped into that cold pool, right? And if your stomach is turning and churning on both, when you, like, if it's a bull market and you're going to sell, if your stomach is in knots because you're afraid you're going to miss the top and it's going to keep going, press on. Commit to your plan. Write it down months in advance and commit to it. Do it when it happens. What happens is people in the bear market, they see the red candles and they update their thesis. They update their plan. You probably said to yourself, man, I wish I had bought more back at 70K, 60K, 50K in 2024. As we rallied out of it, you go, damn, I wish that I bought more. That was your plan. You wrote that plan when you actually had a clear mind. Now you're updating your plan because the price is red. But in reality, you should actually stick to your plan. And that's what I try to do. I formulate, we might go down to 80, and I believe the 2024 zone is going to be very, very strong support. We went to 80, we went down to the 24 zone. My thesis hasn't changed. My thesis is exactly the same. All I'm doing now is executing on the plan that I've been thinking about planning for a long time. And actually, I wrote a piece in January 2025 when we first hit 100K. And I wrote a piece called Rethinking Bears, because I was actually starting to think ahead and say, well, what would a bear market look like in the future? Because I don't think it's going to be the same as previous ones. And that's where I identified the true market mean, which is an on-chain model. We can go through details if you want, but that's where I believed the bear market was going to start forming a floor. And that was about 80K. And then you've got the ETF cost basis converged on it over the course of 2025. Now, that doesn't mean it's the floor. I don't believe in floor models. When I talk about floor models, these are zones where once you're below them, you're in really attractive territory. And breaking through that 80K level, I just saw so many people accept that we're in a bear and in the heat of the moment revise price targets that they never had lower. And you just love to see it.
Yeah. Yeah, you know what? I mean, I love that. I love that conviction. Not, Bitcoin aside, just but like sticking to the plan, having the discipline, just good mindset to have. What would be a killer business would be buying Bitcoin, like pretty much sticking to the plan. Is like, all right, I wish I bought more Bitcoin in the 50s or 60s. All right, well, you're going to lock in this amount of capital. And if Bitcoin does hit, like, it's a limit order, but you can't cancel it, right? So it's like, all right, I wish I had this much Bitcoin when it was in the 60s. Well, man, you shouldn't have backed out. You shouldn't have backed out in the first place. So look, man, before we wrap here, just if you could spend a couple minutes talking about what's exciting to you. Before we hit record, you were saying that there was like some interesting things you were digging into the data set. I guess build out some new models or new. You tell me. I don't want to put words in your mouth.
Yeah. No, I got a good question on a podcast the other day, which was what's the most exciting thing in Bitcoin too? And I was thinking about it, and like, a lot of people are like, oh, there's this protocol, or I'm really excited about this thing, institution, blah blah blah. I'm just really excited about my job, honestly, because there's a couple of guys, I've been giving them shout outs because they absolutely deserve it. ResearchBitcoin.net and Bitcoin Research Kit. Both of them, they've basically built their own software that passes on-chain data. Tremendous value. Like, Bitcoin Research Kit, you can self-host. Research Bitcoin's like $100 worth of Bitcoin. You get just infinite credits. You can study anything on the Bitcoin ledger. And my favorite thing about Bitcoin is how robust the UTXO set is as a source of information. You can see when old money buys, you can see when old money sells, you can see when people take profit, when people take losses. There's error bars around everything, but it actually just doesn't matter because people take the most profit. They sell the most old coins. Well, spend is the correct term. They spend the most old coins when the market's going up. Everyone wants to debate me over they're not really a long-term holder because my arbitrary definition means they have to be at least 55 years old. No. Old coins come back to life in bulls. One spent Bitcoin is one spent Bitcoin. It's the same thing. you can see so much clarity. I'm waiting. There will be a day at some point in the future where the NASDAQ calls me and goes, hey, we've got all these, like, we know we've got all this data. How do we turn it into models for Tesla and NVIDIA and every stock under the sun? Because they've got this data, right? On-chain data exists for gold. We just don't have a chain to study it off. Bitcoin is just like this beautiful, raw, and actually I find this a real grounding anchor for me. The consistency of human behavior that I see in the on-chain data set, it's so reliable. People, when the narrative is the most bullish, ignore all the evidence that people are selling huge amounts of coins at a huge profit. And then what happens? The price stops going up. And people go, why did it stop going up? Sailors buying, ETFs are buying. I'm like, because they're selling a lot, man. Like, no, they're not really long-term holds. I'm like, they're selling a lot, man. So and then what happens? Those folks who buy the top, ignoring the data, looking for confirmation bias, they hodl through the whole bear. And then the poor souls sell everything at a massive loss at the exact bottom on the same day. And to me, I'm like, that's a capitulation, and I'm paying attention to that. That's now interesting information. So honestly, the most exciting thing that's happening in Bitcoin is just that the UTXO set keeps evolving and it keeps being so incredibly consistent. We can also see things that are different. This cycle is different measurably on a number of different wavelengths. For me as an analyst, I've got all my historical patterns, and I assume every single one of them is already broken. A lot of them continue to play out, but I also know that a lot of them are going to break. So for me, I'm very much on the edge of trying to work out what has changed. Horizontal thresholds and all things that used to get hit, I don't really use them. I'm continually adapting, adjusting, correcting for just really understanding the true psychology of what's going on. So for me, the most interesting thing that's happening in Bitcoin for me is literally my day-to-day job. It's fantastic.
Man, I mean, you couldn't ask for a better setup than that. Like you're spending your entire day doing it. And so it is exciting. And it's funny that you point out that the human psychology of the data set doesn't change, right? Like at the end of the day, it's so hard to, it's so hard to stick to the plan sometimes, right? Like it's hard to do exactly what you described. And it's because this thing is just so crazy. It's unlike anything we've ever seen before. And it really tests you. Even for the most convicted
to speak of
people.
Testing, 50% of all the coins are underwater. 50% of the Bitcoin supply is currently underwater. And that's like, we've got a crossover of the number of coins in profit, number of coins in loss. When do you reckon we've seen that happen before? In market bottoms. It's like every single cycle, we've always seen 50% of the coins go underwater. And now folks are like, no, the bear's just starting. I'm like, I don't know, man. Looks kind of late in the piece.
Well, I'm going to stick to the guns then here. Like, I'm not going to fade James. I like James for a number of reasons, man. Thank you for coming on the show. I like that you just tell it how it is. I like that you're balanced, you're measured, you stick to the data. And I think this space has a lot of jokers, man. And I like that you're a real one. You mentioned the price targets earlier in the show.
Get rid of them.
It's crazy to me how people just throw out price targets year in, year out. But they continue to get the engagement.
Yeah,
I know, but they
at this
continue
point
to get the engagement, and then there's no reputational damage. There's no recourse for just throwing bullshit out like day in and day out, and that's probably the most frustrating part. And you have a big platform, you could throw bullshit out if you wanted to, and you'd probably get more engagement. But I respect that you don't do that. And
I actually couldn't care less about engagement on Twitter.
Yeah.
In fact, I'm spending so much less time on Twitter now, obviously because I got a kid, but I just find the noise levels, and you know what? It actually inspires me to just do good work on my own. Like I'm just turning off the Twitter machine because like every time I log on there, I'm like, I'm never gonna get those 20 minutes back, and I just turn it off and I get back to doing my own study because, for me, doing that thinking when I go on Twitter, my favorite thing to do, which is thinking, just turns to mush, and I'm like, nah, cast it away.
Yeah, I feel that too, man. Well, appreciate the time. We don't want to send people to your Twitter then. Where do we want to send them? Where should we send people?
Just head over to checkonchain.com. We've got our charting website, which is, literally every chart that's on there I've made it because I use it. So there's every Bitcoin metric you could possibly want is there. And then our newsletter, which is where we do 2 posts a week, written and video, generally 2,000-3,000 words and 30-40 minute videos. more or less the same thing, but the writing is where I do my thinking, and then the video is where I summarize it for folks who are visual learners. And some people read, some people watch, some people do both. But just trying to help people understand why things happen. Not entry, stop loss, exit, couldn't care less about that. Why do I think things are happening? And here's my worked example.
Checkonchain.com. Smash the DCA button. We're
By
in
the
the
whole bottom.
We're in deep value. Smash the DCA button. Smash the like button and the subscribe button as well. And go to checkonchain.com. James, appreciate you, man. Thanks for coming on the show.
Thanks, man.
Good on you, lads. Thanks for having me.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.